The first session of the day will help us explore the dynamic world of customer payment behavior as we look at the causes of the quick change that's happening in the space. Insights into the shifting customer preferences, expectations, and needs in the world of digital payment will be presented in this session. To moderate the session, we have with us this morning Jeetendra Manik, who is the Business Development in Charge, Public Sector Banks, National Payments Corporation of India. May I request Jeetendra to please take stage. Thank you. Along with Jeetendra on the panel, we have with us Ms. Neha Gupta, Director Prepaid Products, Amazon Pay. Welcome, Neha. We also have with us Roopesh Chandran, who is the CEO, BOB Financial Solutions Limited. Good morning and welcome, Roopesh. We also have Raveesh Bhatnagar, who is the Industry Head, Financial Services Meta. Welcome, Raveesh. And we also have Amod Choudhary, who is the CMO, FPL Technologies. Thank you, gentlemen, and may I now ask Jeetendra to take it from here.
To GFF 2023 attendees, ladies and gentlemen, I'm truly honored to welcome you all for this panel discussion on evolving customer behavior. And we have gathered the brightest minds in payment domain to engage in the thought-provoking conversation today. As we all know, customers are demanding seamless payment experiences. And I see convenience is a paramount to consumers, and especially in the world altered with COVID-19. So in our panel, we have our industry experts. We'll hear from them and understand as to how the customer behavior is evolving and the payment capabilities based on the current consumer values. So my first question to Amod, while customer feedback, I know it's an essence to any product success. So what is the key lessons learned from customer feedback and complaints? And how have these insights contributed to refining and enhancing payment services?
Yeah, so we get a lot of customer callback, and we do a lot of outbound calling. We have a CX. And what we learn is the more the world changes, customers expect a real world intuitive experience through the simplicity and sophistication of tech. So fundamentally, everybody believes that everything should happen through tech, right? That's a very inherent belief. And they're moved away from manual. Now within that, people expect a lot of transparency and control over what payment methods they choose, how should they choose, and they expect the payment methods to be real time, to address dispute, to give them a lot of control over how it is happening real time. Now interesting is, when people expect this, having multiple payment methods, allowing them multiple payment method is no more a delight factor. It's almost become a hygiene. Various platforms get compared that, hey, do you have this payment method or do you not have this payment method? It's become a hygiene, and that's a very large shift. It's no more a delight. And further, with these payment methods coming in, and all of these options, fundamentally, people are expecting far more of the payment methods. It's not just transaction anymore. People expect on-the-spot embedded solutions. People expect on-the-spot real-time behavior. Payment experiences or payment methods are chosen. And by the way, it's not one out of many. They expect to combine multiple payment methods. And the choice is fundamentally whatever allows them greater control and transparency over their transactions. And hence, acceptability of credit is increasing. Credit in an Indian space has an overhang of a certain cultural baggage. We don't like to borrow money, but through payment methods and how real-time and seamless and efficient these methods are, that is driving a choice, and that's where credit products come in. These are some of the initial observations.
Absolutely, that's a great thought. Anybody wants to add anything?
So, Jeetendra, I think taking from where Amod left, payments is not something new, right? If you just go back to civilization, payments always existed in different formats. Earlier, you had the barter system, so people had, those who had hens, they had eggs to barter with. Those who had farming, they had grains to barter with. And people used to barter. Then the convenience of currency came through. They started with coins, then came the notes, then came plastic notes, then came cards, and it's hardly been 5-6 decades that cards existed. And now, today, in the last decade, we will see so many form factors of payment, the digital ones which you just spoke about. So, what has driven this entire change over a period of time has been the core concept of convenience. People want it to be convenient to do a trade. Payments is essentially a trade. I want something, you have something to offer, and I offer you something on behalf of what that product is worth for me. That is payments. And it's essentially two individuals, two entities, transferring what is value to each other. And that transaction is what payments is all about. That payment structure has evolved over a period of time with 2-3 things, and I think Amod also mentioned it. One is obviously convenience, right? The second is about the cost of doing things. Over a period of time, and we would see in the last 5-6 years, and all of those who are here, you'll realize till a decade ago, maybe most of the payments we thought, wow, it was being done on computers, right? Then came the palm tops, the laptops, and today, 60% of the transactions are happening on mobile. We have a wonderful ATM down here, which NPCI has put up, which is talking about UPI ATM, right? ATM itself is not a hundreds of years old technology for us. The speed of execution has increased because the cost of doing transaction is very important. After that comes control, right? Everyone wants to control how they do a transaction. Most importantly is the consumer, because it is his money, his choice, his decision to do a certain thing. How much you're able to give control to the customer makes a difference. When the control comes to, the next factor comes, which is very important, which is about security. Every transaction, when you do, the thing which is running behind in your mind is about how secure the transaction is, because you want your money to be safe, because it has a value to you. Similarly, is for the other entity which is selling it. They need it to be secure. The last, which is more important, most important, is assurance of service. When you pay, you want that assurance of delivery. When it was barter system, it was face to face. You had the eggs, you give it to the other person, and he gives you grain on behalf of it. Then it became shopkeepers. You go there, you give cash, and you pick up the goods and come back. Today, you are trusting it on the internet. Most of the transactions that all of us do here will be, we have never seen the shopkeeper. We don't know where the things are coming from. Most of the times, we have not even touched and felt the goods that we are buying. It's based on trust. And trust is based on assurance that it will happen every time seamlessly how I did it the first time. So there are cognitive behaviors which are very important. So these are the things which I think keeps on influencing how payments get it done. And over a period of time, they interplay amongst themselves, how these factors play, and different players, different institutions, consumers, choices keep on changing. And that is very important to be addressed to.
Great points by Roopesh. I think he highlighted really key words, which is convenience, cost of doing it, security and trust. So yeah, going to Raveesh, in what ways has the ongoing COVID-19 pandemic accelerated or altered customer behavior in payments landscape?
Yeah. So, good morning, everyone. I think it's an early morning. But yeah, so see, this was this very question which actually is also very close to my heart. I used to be in consulting, and April 20 is when I landed up actually as head of digital in one of the mid-tier banks in the country. So suddenly I'm there and COVID has hit, right? All my pre-theories went for a toss, right? And this is what I was seeing, right, before I came in. So I was seeing that UPI was picking up, eased, I think as Roopesh is talking about, there were P2P transactions happening, debit card transactions were happening in a certain manner, certain pace, right? Credit card, for years, the customers were at a certain number. And suddenly, you have COVID coming in. So UPI is actually a classic example, right? We saw roughly first 3 years of UPI history, seeing roughly 1 lakh crore of value of transactions hitting in, 670 million of worth, specifically volume of transactions hitting in.
Right.
And then suddenly, like in 1 year time frame, this is like, it took almost 6 months for it to become like 1.5 times in volume, and it became double, right? So it ended up, the transaction volume started booming. Now we wanted to understand what is happening. So when we went to the consumers, and to your, I think, first question, it was just to understand what is happening, right? We went to the consumers to understand what is driving this, right? I think specifically we saw a lot of increase in P2M transactions suddenly, right? People stopped using debit cards to the extent ATMs were sometimes not accessible or did not have cash. Credit card, wherever they could use, they could still use, but UPI was becoming the denomination, right? And people wanted to keep less cash. In fact, if you take out, like if I take out my wallet right now, like I have moved away from cash. There's like actually, and it's a problem sometimes, right? You don't end up having a denomination to pay for something. So from that particular point of time, right, like that 2 lakh to 4 lakh happened in 6 months, and now we have again in a steady sort of a trajectory. We have hit 15 lakh crore in value, and we are sitting at almost like 10 billion of volume of transactions on a monthly basis. So COVID actually provided that steep jump in customer behavior, right? That behavior changed the entire thing in that I want to move away from cash sort of an economy. More merchants became accessible to them because merchants started keeping QR code. I think the economy per se started becoming prepared for it, right? And I think we're still scratching the surface. Still, India is largely a cash economy, but I think those smaller transactions have gotten converted. So the ease is something that played the trump card overall.
Absolutely,
I
absolutely.
can add to that
Yes.
point, I think, that you brought about. I think COVID had 3 influences kind of happening simultaneously, if I can kind of talk about it. And I think the underlying thought process or the insight really there was safety is paramount. And if safety is paramount, I think contactless became an option. I think the 3 influences that I want to talk about is, I think, the societal influence. I think the sheer fact that now that access was so democratized with UPI that cards was not the only way to kind of do digital payments and go contactless. And which was, for example, if you would imagine COVID happening in 2015, 2016, I think that there was no alternative because there was only cards and the access to cards was only with select few citizens in the country in that sense. So that's one. I think the second aspect is the psychological aspect. I think the ease and the convenience, I think just how simple it is to set up and to get started because it's the source of money is like your bank account. And therefore you don't need to do anything more to kind of really get yourself enabled. I think that was another big driver in that sense. So because I think like payments is no longer about transactions, it's about experience.
Absolutely.
And I think that's the second piece that I think COVID really helped and this factor influenced it. And the third one is I think behavioral. I think my anda bread buying becomes on this. So if I move to doing digital payments on an everyday basis using digital currency or digital modes or payment modes, I think that's just an accelerator because then it just kind of flows. So behavioral influence is the third one that I think I want to talk about. And I think all these 3 aspects influenced very significantly how digital payments kind
Bang
of
on, yeah, bang on. Yeah.
Sorry, if I may just add there, I think what where we are today and GFF 2023 we were talking 22, 21. Had GFF been there in 2015, if that was the scenario, we would have been talking about just the Jandhan movement which was happening, the Aadhaar seeding which was just happening, the mobile, so JAM trilogy which the government speaks about, and yesterday Madam Sitaraman also spoke about how the transformation of numbers are happening. I think the momentum had started. COVID just gave it the boost. It was like a nuclear reaction. It just needed that fission material, right? That the material happened and it just triggered everything. I think we were at the cusp of change. What it needed was that nudge. Call it good faith that COVID-19 happened and we are here today. Otherwise, this speed of implementation would have been much slower. Dilip spoke out yesterday about 10x the volumes which is going to happen. So UPI is just at the scratching of the surface. The numbers we are saying wow today, 2 years down the line said, oh, that happened in history, right? That's the speed which is happening. And like Neha rightfully said, because it's parcel of my daily life, I don't see it as an effort of doing it. I don't see it as an effort to pull out my mobile. Today, a consumer can walk out of his home with much more confidence of not having his wallet, but he will get a heart attack if he doesn't have a mobile. You'll first think, where's my mobile? You don't search for your house keys, you don't search for your wallet, you search for your mobile. Where is it? Because that's your life which has come up to. And everything is an app-driven thing. So it has become ease, convenience and intuitive. It's part of my living thought. And hence it is not difficult. It is, like you madam rightly said, it is democratic. So it doesn't make a difference between whether you are the Ambani or the poorest of the poor in this country, you have equitable access to it. And that's very important.
So just to highlight, I'm sure most of you would be aware that last week we had a remarkable milestone on UPI. We have already crossed 10 billion transactions, and now with credit card on UPI coming in, obviously we have more acceptance. We have 250 plus million QR codes in market which can be used today for scan and pay through credit card, wherein with POS machines it was only limited to say 25 million. So yeah, I definitely see there's going to be a big shift in this. So Roopesh, to you, especially on this credit card, wherein you have seen some experience in last 3-4 months with Bob Financials going live. So how has the rapid advancement of digital technology influenced customer preferences and behavior when it comes to payments?
So before I address how it has influenced, let us see what type of consumer behavior exists for payments. I classify them broadly into 5 categories. People can classify into more. The first one is the consumers who are cost conscious. How I call it, the Indian consumer, right? Anything which is cheap is what I want, right? The lowest cost. So he's the conscious thinker. Second one is a rational or cognitive thinker. He will have a plan of action. I will search, I will select, I will buy. And he will follow that pattern, no matter what happens. There is a third option which comes to that I will try, Sigmund Freud theory, I will try and do things which is societally acceptable. So I will try and copy what my neighbors, friends do, and I will do that, which is like the Lagarde or the copy theory. Then there are consumers who are influenced by their last impression of what happened in a transaction, whether it was positive, negative, that influences their latest transaction. And then there is the fifth one whom I cannot classify anywhere. It is an individual driven. I will behave very differently, Neha will behave very differently, Raveesh will behave very differently, and each one of you sitting here will behave very differently. That's an individual one. Now all these 5 are the different payment mechanisms. With UPI, the barriers broke, right? All of them had the same way of making payments. My way of reaching that payment mode may be different, but when I reach there, then it is equitable. CC on UPI, what it did was, and if you look at any of the RBI data for the last so many years, while the credit card numbers are maybe 1/10 or 1/15 of what debit card numbers are, but the number of transactions are nearly equal, right? And growing much faster speed. While you may call it that credit card customers are more evolved, they are metro, they have more choices and options, but today credit cards, at least for my institution, I can say, Bharat also exists. There is an India, there is a Bharat, well, there is a controversy happening around it outside these doors, but that is a very different Bharat. The aspirations, the expectations are very different. They do not do daily shopping. They have a purpose and event for which they shop for. And today they also have credit cards. 2 days ago, RBI has done a wonderful measure. They have now expanded the product to say any credit lending to an individual at his choice can also be on UPI. That opens the door far and wide. Because now, any money that is there with you, your own, of course you can use it on UPI. Even if you have taken as a loan, now you can use the UPI rails to pay. What does UPI essentially did, and for credit cards especially, like I can speak about my institution, we didn't do any active promotion on UPI transactions for the first 2 months that we were live on. No promotions. We didn't tell anyone. It was the best kept secret with us. Yet we saw daily 10% jump in number of transactions. Daily. It became 1/5 of my volumes last month. I did nothing. No promotions. It was because customers found it intuitive. It was a habit. I went and bought an Aril Pani in the morning. I pulled out my mobile and paid it. And here I had my credit card now to pay. And because credit card is someone else's money, not my own, I have 50 days free credit period. The consumer who is the Indian consumer, cost conscious, bang on. That's what I want to take. So what added to the convenience was also the second factor, which was cost. Third factor, it was in my control in my mobile. It was that easy. And security existed, right? Because now there is tokenization. So regulator has also helped us a lot in where we are today. We take it for granted. 10 years ago, none of this existed. Guys, 5 years ago, none of this existed. All of that is in the recent today. But today we think it is BAU. It is business as usual. All of these things we have quickly grabbed on and moved ahead. So CC and UPI, while it gives the next nudge, I believe the recent RBI guidelines 2 days ago will give it the next boost. So very easily, I'm sure we will overshoot what Dilip said. 10x of the volumes, you said a billion. Billions of transactions will happen in a day. Nothing will change. Because consumers do those transactions daily. Cash-rich economy, cash transactions will simply get replaced to digital cash, and there is CBDC, which the government is, the regulator is bringing through. So change is happening fast. All we need to do be in speed with it, because consumers are catching on to it very fast. And we will just be irrelevant if we don't do it.
You know, I can't help but add here that, you know, one of the things that you almost forget, we take UPI for granted now, but, you know, one of the things that UPI did for all of us is got a lot of Indians, irrespective of literacy, irrespective of financial situation, comfortable with online payments. And that's a huge, huge shift. You know, the second thing that Roopesh also touched upon, that with the multitude of payment options, you know, permutation and combination of payment options, and not just singly one payment option, is what is driving the next level of innovation. So UPI with credit cards, you know, that's a combination already happening there, you know, and that's the exciting world that we are looking at.
Right. In fact, just wanted to add, I have analyzed some banks' portfolio on credit card. It's given a good boost, like he just mentioned, 10%. I have seen some of the banks have doubled their volumes. They have seen double the value also on the portfolio. The customers who are transacting 4 times in a month have started doing 12 to 15 transactions, because they are seeing the ease of making payment and putting everything, all your mom and pops transactions also on the credit card, instead of loading your savings account on the actual UPI, which we went started.
Jyoti, when you said that, let me just share. We had the, when we didn't do any promotions, we saw why was the customers jumping so fast. So we saw actually one customer who was doing nearly 100 plus transactions in a month, when he never used to do more than 3 transactions on the credit card. When we saw the transaction, what he was doing is every day morning, he buys, he scans a QR at a Naril Pani wala. Now he is paying through the, so it's a 30 rupees Naril Pani. Every day he's doing. It's a habit, right? Just that the UPI from savings account may be shifted to UPI on credit cards. Yeah. Every day afternoon, he likes to eat a pan. So we know that same shop he goes. So now there is data enrichment. We actually, scary part is I know where exactly he goes. I know which Naril Pani wala he goes. I know which pan wala he goes. I know exactly the time he goes. I know the window. 12:45 to 1 is when he buys the pan daily from this shop. That is the level of information which can now be used by everyone to actually create hyper-personalized solutions for his consumers. So the sky is the limit for what we can deliver. So absolutely, CC on UPI or UPI has opened the doors. Now it's up to us to build the Geo Convention Center after that door.
Absolutely. Because he rightly mentioned, we have entered into the categories where credit card was never there, like your pan walas, your naril panis, even the dairy products we have seen, the doodh walas also accepting this. So yeah, there are a lot of pockets which are opening because of credit card on UPI. So yeah, there's gonna be a massive shift. So Neha, to you, what strategies have proven successful in encouraging customers to adopt new payment methods, especially when considering the cultural and regional diversity of India?
I think, so I can talk about a few, I think, but there is no substitute for experience. I think the most important piece is how frictionless, the right from the onboarding to setup to first trial and then kind of a digital first experience, I think, that you can create for customers. The second piece that I think, at least I think in our context, from our experience, is like, I think, brutal segmentation. I think like really prioritize for which segment and solve for that from that perspective. So I think it answers to your cultural and regional aspect as well. Like, just if I can kind of share some examples from Amazon itself, I think not all customers are going to pay prepaid, not because they don't trust digital payments, but just they want to pay at doorstep. Right. They are paying digitally at doorstep, right, very significantly higher than what it was earlier. But I think like you cannot craft your strategy thinking that every customer will start prepaying. The customers will pay because there is also other dimension about the trust on the product that they are buying, the trust, the time that they need to kind of really wait for before the product comes to their doorstep. So some of that is very, very important in the
Very
entire
true.
experience journey in that sense. I think the other aspects around, like, how do you kind of really stitch up the first trial? Because I think how simply you make it, rewards play a big role, whether it is discounts, whether it is cashbacks, whether it is, no cost EMI kind of experiences, which gets them to really try their first credit product in that sense. I think those are, again, an important piece in that sense. And I think the last but not the least, which I think Roopesh also touched upon, was trust. I think when one thing fails, I think it's the biggest non-value adding action that happens to the customer. And in a new, so even today on Amazon, like, new customers, 80% of them buy cash on delivery. They don't pay digitally because of multiple aspects. First of all, they're coming from tier 3, tier 4, tier 5 towns. And therefore they don't trust digital payments. They don't trust Amazon per se, because online commerce is really first for them. So I think how you handhold that customer and take them through their journey, I think that's important. And in that process, building trust is very, very fundamental in that sense. So I think those are 4 that I feel is very, very critical if
Very
you want
true.
to kind of really nudge customers from one step to another.
See, I'll just like to add one particular thing. I think while, all of us right now are talking about, these transactions increasing, I think there is also an element around educating the customers and the far-reaching consequences of actually making this message reach out. So still the Bharat, right, that we are talking about requires people to, get onto these models and use them more frequently, right? On the other hand, there are companies, for example, banks typically are very okay to deal with people who they know that are okay to provide credit cards, right? You have these models that exist. The models are actually tuned to giving credit to people they know that are going to for sure return, right? But there are companies in India right now which are moving and putting in NTC models, right, which is new to credit models, trying to get more people into the credit economy. And hopefully, with the combination of these two, which is how do you get your message to reach out to the wider audience, and then companies which are actually able to provide the right set of models to get and widen that credit net. I think that becomes complementary to driving what we want to drive, right?
Absolutely.
Because payments you will never be able to drive if you don't have these two things, which are actually stepping stones in order to get more payments into the economy.
True.
One of the barriers to adopting some of these, payment methods are fundamentally, like Roopesh touched upon, ability to trust that, and for the supplier to be able to do the dispute resolution, right? And that's where credit actually starts coming in. It's a cause and it's an effect both. Credit, if you have credit, fundamentally your ability to use some of these methods increases, and once you use them, it starts a virtuous loop. In fact, credit adoption, the more of credit adoption also starts happening through these payment methods, because then you start becoming more comfortable with credit, because fundamentally what happens is that you choose for the most efficient method of payment, right? So credit actually comes in and helps you with dispute resolution and trust as well, because, well, your account is not getting deducted in the real time. You always have a third party to go back to and raise your dispute and get it resolved. So credit becomes so intertwined here that it almost becomes a cause and an effect both, but the availability of the credit accelerates the adoption of some of these payment methods.
Very true. So Amod, again a question to you. If you can highlight the intersection of social trends and payments, and how are the changing social attitudes impacting the way customers interact with payment technologies?
So, COVID was one of those things which changed some of those, basic tenets of how we interact with people. So COVID was a bit of a, shocker, it jolted the entire system, and we learned some new behaviors during COVID period. So I can't help but not talk about it, but one of the things is, transaction or payment did not just remain the last part or closing part of our interaction. It a lot of times became the starting part of our interaction. Because look, what COVID did to a lot of us is, we started interacting with faceless merchants. We started ordering products which we had not seen. And our interaction started from payments, not ended with payments, as usually happens mostly in the real world. So what happened is, fundamentally, transaction became a very important method of interaction. So this is one of those social aspects which was triggered by some natural calamity or whatever. But got into our social fabric. The second thing that seems to be happening is whatever we call, whether we call it Gen Z or whether we call it millennials, their behavior is the driving force behind the innovations that we are doing. They look at payment methods or payment solutions very differently from the previous generations, in the sense that for them, both the world, physical and digital, meld together, right? They want, if they're watching let's say a video somewhere on an online space and they'd like to buy some product, they want a payment method to be embedded in that, right? They don't want to have the world of payments and world of, checking out choices or exploring choices to be two separate worlds. For a very long time, these two worlds have existed separately. They want embedding of these experiences. The third thing, which actually starts happening because of a certain cultural, social thing, again kickstarted by COVID, is no-touch payment. No-touch payment almost got coined only during COVID. Not that these payment mechanisms didn't exist before, but no-touch payment or payment remotely or so many things. You see innovations where you see now merchants putting up, or all of these guys putting up speaker systems. Speaker system is a huge and a very intuitive way of bringing physical and digital together, right? Because the biggest problem that somebody used to have before, COVID happened, we used to pay and then we would expect an acknowledgement of that, right? And the merchant was equally literate or less literate than us or less comfortable than us, and he would take some time, and hence that discouraged the adoption. So there are a lot of cultural ethos and a lot of cultural things which have been kickstarted, accelerated at some point in time, but are leading to evolving the payment ecosystem, creating newer innovations, and driving adoption as well.
Okay, great. I think we have very limited time. I have a lot of questions. It's a vast topic, but considering we have a great audience here, I'll open it to audience if they have any couple of questions before we conclude this session.
There's something, I can't remember the name, but there's a way you presented it. I'd just like you to clarify a bit. You said transactions started first with payments, right? I mean, COVID drove that behavior. Now, how do you think it has persisted post-COVID? What I mean is, yes, we're forced to do it, but from your experience, is there some other benefit? What do you see as the near to medium term, fallout of that kind of thinking in terms of transactions? Thank you.
I can take that. See, what happened, at least in India, is that while COVID provided that necessary push, right? So you have to understand maybe the chronology of the entire thing, right? Internet banking, roughly 2014 the penetration was around 14%. 2017, it actually crossed 20-odd%. By the way, nearing COVID, it had become around 34 to 35%, right? People started using one form of internet or mobile or different forms of banking, right? COVID actually made it almost double. It actually crossed 60-odd%. Now, what has happened is, in terms of transaction modes, post-COVID, which provided the necessary push, what has happened is the entire ecosystem actually started working towards it. I'll give you a small example. In India, you had this unique, so there were a couple of banks who came out with a very interesting concept, saying that, okay, you can send the payments to a mobile number. You don't even need to know your VPA handle or anything. Now NPCI actually looked at, there was a loophole in the way they had implemented it, but NPCI actually took it positively. They said, why don't we introduce this as a proper technology? They asked both those banks to actually shut it down. They actually launched something called UPI number, and that particular thing has actually, again, right, it's ease that now I don't need to take Amod's number to send money to him. I just need to know his mobile number is already with me. I can actually send money to him. So the regulation across, what has happened is both NPCI, RBI, all the regulatory bodies actually have come together to say that how can we keep the pace of innovation now going post the necessary boost that COVID had given. So all of that has been in play with the recent UPI and credit card regulations coming together, I think it's just every month you see like a couple of interesting things being put out there, and everyone is actually coming out to come together to find a new way, right? Like, I couldn't have imagined 2 years back in India us thinking about a CBDC, a central bank digital currency. The idea was thought through, and in a matter of like less than a year from ideation to conceptualization, all of that was live in the market. So I think we are in a very, very great place because all the entire ecosystem is thinking about innovation, convenience, and how do you turbocharge this particular growth that we have set out on.
If I may just add there, while payments may be one part of it, COVID also changed a lot of behavioral things, right? Most of the people started moving to large packet purchases. If you ask FMCGs, what did COVID do was, from small sachets, people started moving to large package buying. Because COVID suddenly saw shortage of items. So people who were earlier buying maybe 1 week ration or 2 days ration, they started buying a bit longer period, right? So that brought in the fear of uncertainty to a play. COVID brought the second thing was, till now I was dependent on my neighborhood kirana store where I will go and pick up things. I started trusting more home delivery. I started trusting the kirana store I have never seen in my life, right? Third thing it did was, it brought in the options of payments to such a multitude that people also started looking at BNPL. BNPL shot up, not just in India, you look at Europe, you look at Africa, everywhere, BNPL started shooting up because people also started looking at affordability and purchase capacity. People wanted to buy, didn't have an option, and here there were players who were ready to give. So the fintech players started solutioning for it. So COVID actually brought in I think it brought in speed of execution much faster for everyone in the ecosystem. Right from the supply chain to the middle parts who did the payment processing to the end consumer who wanted more options and wanted to try more. Because somewhere deep down the line as human beings, we thought life is finite has finally come true. Right? There is no immortal fountain of elixir of life, we will live forever. COVID-19 actually brought in the fear of mortality. And we wanted to live the moment more. So maybe somewhere it also brought in consumerism much more. We are ready to spend more now because we think this is it. And that has also speeded up the entire acceptance of payments mechanism. We are now ready to accept it. Hence, there is acceptance for fintech players to come through. It's not the other way around. Let us not forget, none of us, at least in financial space and all, none of us believe that we will create a product and consumer will buy it. No. Consumer has a need, it has a requirement, it has a gap, we will plug something there to make us relevant. It's the other way around. And now I think the need to be relevant is much more because all of us want to create that space. And if one doesn't do it, there are dime a dozen others who will kick us out of that space. So that's the change which has happened with COVID-19.
Any last question?
I'll make it quick. This is on the risk aspect. We were talking about the trust that needs to be built into the system. I wanted to bring in two aspects of risk and ask the panel, how are we addressing the authenticity of onboarding a UPI handle? Because you see a substantial amount of people losing out because they send the insurance premium to some unknown UPI ID, which has the brand image of a brand, and they are believed to, and you could create handles which mimic the brand. On the other side, you also have many instances where mandates are being misused. So there is a risk that is coming up in the system along with the growth which is happening, which it's always good to see the growth, but if this doesn't get addressed, then the whole question and the foundation of what you just mentioned is getting. So any trends that you're seeing, any initiatives that the responsible financial institutions are taking up to make sure that identity is certainly getting checked? Thanks.
So let me just start with how I see risk, right? Risk is like a balloon filled with air. You try and put controls in one place, the air just moves to another place. Till you put so much pressure that the balloon just bursts, right? Which is not what you want to do. So risk will always be there. And that's a principle of business. Risk and returns come together. That is first part. Now second, fraudsters also have families to feed. They also have exotic locations to go and spend their holidays on. They want to do it more. They are the smarter amongst us who will keep on finding loopholes. And loopholes will exist. Loopholes tells you that human mind has a limitation of thinking. We are trying to solve a solution in the shortest possible time. We find the shortest way of doing it. And sometimes the shortcuts also lead to loopholes. So they will exist. So we have to accept that. Third portion, risk controls mechanism, risk mitigation mechanism is a race on a treadmill. You're not going anywhere. You're still there. You're just running at the speed and the treadmill. So it will always exist. Saying all this, I'm not predicting a doomsday. What I'm saying is, it has to run hand in hand, because one step that you take, the fraudster will take 2 steps ahead. Because he will always find a way to go ahead of you, because he's the smarter ones amongst us, right? Saying that, what has happened in UPI handles is many of the banks now tell you to verify, right? You can have a way of verifying who the person is. Many a times, and I have seen that intuitively, if I'm paying someone or someone is paying me, they enter the mobile number and they ask me, this name is yours. This photo which is coming here is yours. This photo is not yours, right? So I have to say, no, that is not mine. It was festive, I put something there. So second level of verification started coming through, whether it's the institution which is putting through or the consumer which is putting through. Are we there yet? No, we aren't there. There will be stages, places which will happen, and there are today, as we speak, in these 3 days also, you will have many players who are there in the Pavilion 1 and 2 who are showcasing those risk control measures. How do you build trust? And trust is something which has to ever evolve, right? Trust was there 5000 BC. Trust was there 500 AD. Trust was there in 2000 also. Bharosa aaj bhi hai, right? And it has to be there tomorrow also. Only the contours changes as to how you address it, how do you create a solution for it, how do you make it more acceptable. Because trust has to be universally equitable. It cannot be that I have a different trust mechanism, you have a different trust mechanism, we both fall for it. We both have to fall for the same trust mechanism which is there. So it will be a race, it will happen, and it will happen over a period of time, and all of us will have equitable stake in that.
But just let me quickly add 2 very specific and very small little points there. So one of the things is, definition of identity is gaining more parameters to it. So let's say one of the parameters that recently got added, since we provide technology to credit cards, location got added as an additional definition of technology, right? And hence additional definition of identity, and hence identity will gain more parameters for it to become very difficult to duplicate or mimic. Second is a lot of controls. You feel safer when you have some buttons to press and some controls in your hands. Like Roopesh said, hey, this is not your picture, or is this your name? A lot of controls will get added into the hands of the person who's initiating the payment and who's receiving the payments. But the central point is identity. The definition of identity will keep getting broad-based so that mimicking the identity becomes very difficult. Sorry.
Yeah, but I think one point that I think just the last point, which is it's an important one. I think, sir, I completely agree with the point that you're making. And I think while we're talking about what system can do, what processes can do, what regulations can do, what technology can do, I think the most important aspect is what customers need to understand. So customer education and financial literacy at really the last grassroots level, Absolutely. I think there's no substitute for it. And I do agree that I think as financial institutions, as fintech companies, I think we all need to do our bit. I think the regulators kind of prescribe some of those things.
So in fact, just want to add, we are already driving this initiative of creating customer awareness. So NPCI, in collaboration with all the partner banks and all the fintechs, is driving UPI Chalega campaign. We have a lot of TVC ads, messages, paper ads ongoing every year with new themes. So yeah, we are continuously engaging with our customers to build this awareness. So I think our times is up. Thank you once again, everyone, for joining us today to make this panel an inspiring and a memorable exchange of ideas. Thank you all.
Thank you so much.